So you get the zero, then you can increase the balance sheet. So they're raising rates and lowering the balance sheet, so they can cut rates and increase the balance sheet. That is
Jim, thanks for joining us in Australia at ABC Bullion, and welcome to Custodian Vaults.
Thank you, Jared. It's great to be with you. I love being in Sydney, and it's great to be with you personally.
Fantastic. Look, let's start with the obvious, which is the gold price. 2 months left in 2017, up roughly 10% in dollar terms. Given the myriad of factors that move the gold market, how have you seen the performance of gold year to date so far?
Well, it's interesting, Jordan. You're right. It's up about 10% year to date, but it's been a very volatile pattern. So it goes up, it has a drawdown, it goes back up again, goes down again. Almost every other month we've had this up-down configuration, but it's forming a very interesting pattern. By the way, I'm not really a technician. I look at charts. I don't think they have much predictive value, but they do help me explain what's going on. And gold has executed a series of what they call higher highs and higher lows. So it'll go down, but it won't go down as much as it was the time before. Then it'll go up, and it'll go up to a higher level than the time before. So the overall progress has been up, but it has this up-down configuration. Right now, literally today as we're speaking, it's had a little bit of a downdraft, but it's forming a bottom, and I would expect it to go up again. I expect it to get stronger by the end of the year. A couple things going on there. One, Russia and Chinese buying continues to be very strong, as you know. Russia and China have each more than tripled their reserves in the past 10 years, but there's no sign of letting up. China's buying 20, 30 tons a month. Russia's buying 20, 30 tons a month. China's less transparency, but no doubt they're buying comparable amounts of gold. They're getting ready for something, and of course, there's geopolitical threats, war with North Korea, and the supply situation is extremely tight. As you know, ABC's in the refining business. So the fundamental case for gold is as strong as ever. I expect it to be higher by the end of the year, but it has had these rough edges.
Absolutely, and look, gold obviously seen as a defensive asset within a portfolio. So obviously, what happens in broader financial markets is important. Across the course of this year, we see equities hitting all-time highs on an almost weekly basis, and the complete sort of absence of volatility in risk assets as well. How do you see things in broader financial markets playing out over the course of the next 12 months?
Well, you're right. Stock markets, I mean, the U.S. stock market almost looks like a bubble to me, but so what? I mean, bubbles go on longer than we think. We never know when they're going to pop. So just because it has bubble dynamics doesn't mean that it can't go a lot higher. In fact, it may very well. But the real competition for gold is fixed income. People look at gold and they look at Treasury notes, whether it's Australian government notes if you're a dollar investor, or U.S. Treasury notes if you're a U.S. dollar investor. So there are two things that are headwinds for gold. Number one, higher real rates. So take the nominal rate minus inflation, that's the real rate. If that gets higher, it makes the cost of owning gold a little bit higher. You'd rather be in the fixed income. Obviously, exchange rates make a difference for global investors. And also Fed policy. So right now, interest rates have been going up, real rates have been going up because inflation has been coming down. That's a headwind for gold. That's why gold's down a little bit. However, I expect that to reverse between now and the end of the year. Very specifically, December 13th, the Federal Reserve has an interest rate policy setting meeting. The market is priced for a rate increase. I don't see that. I expect the Fed will stand pat. They'll take what they call a pause. That's because deflation is weak, employment has been weak. Lots of reasons why the Fed is going to pause. So if the market's priced for an increase and you don't get it, that's a foreign beast. All of a sudden, these trades could reverse very quickly. Yields could come down, bonds could go up, gold could go up, euro could go up. So this is why I look for gold to have a very strong finish to the year.
Fantastic. Jim, we might cross the Atlantic if we can and talk about the word that's on everyone's, I suppose, mind when it comes to Europe, and that's Catalonia right now. Now, you've obviously been on record for some time as saying you see the euro as enduring, despite the myriad of problems there are within the eurozone. So can I get your view on what's taking place in Catalonia right now, and perhaps just as importantly, the implications for euro-dollar over the coming year?
Well, of course, Catalonia has got a very strong succession movement, and they have declared independence from Spain. That will fail. The Spanish government, and they're backed by the king, and this will do what they have to do. So they'll arrest leadership, they'll disband the parliament, they'll bring in Spanish police, Guardia Civil, and other military forces if they have to maintain order. Now, they're going to allow peaceful demonstrations, and that's fine. That should be the case. But they will not allow Catalonia to succeed from Spain for a couple of reasons. Number one, countries just don't do that. You go to the U.S. Civil War, bunch of states, Confederate states, left the Union, and Abraham Lincoln said, no, you don't. We're going to restore the Union, and we fought the bloodiest war in American history to do that, and the Union was restored. Catalonia won't end any differently. One interesting footnote there, Jordan, just the other day they declared independence, and that they now have a kind of provisional government that's trying to form a sovereign Catalonian government. The first problem they ran into was money. They don't, if you're Catalonia, you can't use the euro. The euro is not inviting them in. They're not getting diplomatic recognition from any major country. They have to have some form of money. They can print out some Catalonian dollars, but who's going to take them? They won't be any good in international trade. Maybe the pro-independence Catalonians will, exchange them among each other, almost like a form of barter. They have no gold. It would be actually interesting. They have a much better, good example of how if that provisional government had acquired gold, they might be able to have a gold-backed currency and a little better chance of success, but I don't see that. So, and there are all these independence movements all over Europe, succession movements, I should say. Scotland leaving the UK. Belgium is two different countries, Flanders and Wallonia. They want to separate. You've got, Munich makes noises about the Northern Italy, the Northern Alliance. So all these movements, you have to suppress Catalonia. If you don't, these other movements will come to life, and Europe won't let it happen.
Jim, I want to turn to something that's particularly relevant for Australian investors, given we're here in Sydney, and that's the outlook for China. Obviously, it's our most important trading partner in terms of exports for Australia. It's also a significant source of inbound capital now, much of which is obviously tied up in our property market. Growth figures there have looked okay this year, probably above market expectations. How do you see things playing out in China in the next 12 months and the possible implications for the Australian dollar and Australian interest rates?
Well, actually, everything's looked good in China this year, but that was by design. This is a top-down command and control economy. They just concluded, as you know, the National Congress of the Communist Party of China. They do it every 5 years. It's a big deal. They anoint the new leaders. President Xi got a second 5-year term, but importantly, no members of the standing committee who would be logical successors to Xi were appointed. That's a signal that Xi might even stay on a third term or longer. He's starting to look like Putin. He's the strongest Chinese leader since Mao Zedong. But the point is, he knew this was coming. He's been preparing for it for years. He wanted to keep a lid on things. China has tons of problems. The debt to GDP ratio is through the roof. A lot of the growth figures, I won't say they're lying, but 45% of Chinese growth is investment, and half of that is wasted. I've been to these Chinese ghost cities. I've been all over China. I've spoken to provincial party officials and others. They financed all this construction. You do create jobs with construction. You pour cement and you make glass and you have steel and there's real buildings. But if they're empty and you financed it with debt, you have no revenue to pay the debt. So the wealth management products are Ponzi. So China looks extremely unstable. They've been fighting, they've lost $1 trillion of reserves. The reserve position went down from $4 trillion to $3 trillion. So Xi has been keeping a lid on things, propping up the economy and trying to keep these problems from spinning out of control. Now that he has what he wants, now that he has the power that he wants, the question is, how is he going to use that to address some of these problems? And one of two things is true. Either he will address them substantively, which means China's going to slow down a lot, and that's going to have very negative implications for Australia. Or, and I think this is more likely, he won't address them, and they'll get out of control, and then you could have a financial crisis in China. Now, the financial crisis might take longer to play out. That might be 2 years away. If Xi addresses the problems, the slowdown could come next year in 2018. But either scenario is not good for Australia. Australia's the lucky country. Actually hasn't had a recession in 26 years, which is amazing. Nice job. But Australia is very vulnerable to China, and China's got some serious problems.
I can't leave this interview without asking you a little bit more of a fun question, which is of course about the Emirates Melbourne Cup, which ABC Bullion is delighted to manufacture, and we're really looking forward to welcoming you to Flemington next week and have you there. Two questions, I suppose. One, have you always had a bit of an interest in horse racing? And secondly, if you could have a bit of a punt for us, and I know a lot of our clients will be interested, where do you see the gold price finishing 2018, so about 14 months from now?
I thought you were going to ask me who's going to win the Melbourne Cup. That would have been, I know more about gold. Actually, I love horse racing. When I was a little boy, my father took me out to, we grew up in New Jersey, not far from Philadelphia. There was a racetrack called the Garden State Racetrack, and he took me out there for actually workouts in the morning. I saw Kelso, if you look up Kelso, one of the most famous thoroughbreds in American history, and Kelso was doing an early morning walkout, so I've always had an affection for it. I used to have been to Belmont Aqueduct, Atlantic City racetrack, so I very much enjoy racing. My first trip to Australia, Sydney in particular, was 1982, so 35 years ago. And a friend of mine, I was working for Citibank at the time, he took me to the Sydney Turf Club. So we went out to the races in Sydney. And two things were disorienting to me. Number one, in the United States, the horses race counterclockwise, so the finish is from left to right. In Australia, they race clockwise, so the finish is from right to left. So it's just a custom. There's no right or wrong way to do it, but that was a little bit disorienting. And the other thing that confused me is that in the US, we have our system of betting is called pari-mutuel. And what it means is you place your bet, you have indicative odds, but you don't get your final odds until the last bet is placed just before post time. So they look at the entire betting pool, and then they set the odds mathematically based on the weight of money. So you don't actually know what odds you're getting until the race starts. In Australia, of course, you have a system of bookmakers who will give you odds and stand up to them, so you know what odds you're getting. So to me, the Australian system is a little more interesting. You can arbitrage, you can hedge your bets, you can shop around a little bit. It's like gaming eBay in some ways. So I think the Australian system is very interesting. But my first experience was, well, this is done a very different way. But very much looking forward to the Melbourne Cup, and it's a thrill to be here with the Cup itself. And Jordan, as far as the second part of your question, where do I see gold at the end of 2018? As I said, in the next few months, I see gold finishing 2017 on a much stronger note for the reasons I mentioned. The case for 2018 is even greater, and sad to say, the U.S. will attack North Korea. Odds are 70% that we will start a preventive war with North Korea before the end of March. Now, by the way, I had that day from the director of the CIA, Mike Pompeo. I met with him in Washington last week. He said, his exact words, it would be imprudent to assume that North Korea will not have the nuclear capability within 5 months. So this meeting took place on October 20th. 5 months forward is March 20th. That's the outside day. So what he was saying is, we don't know exactly what they have today, but we're quite sure that they will have the ability to attack the United States within 5 months. Therefore, we're not going to, we've said, the President's made it clear, General McMaster, the National Security Advisor, General Mattis, the Secretary of Defense, and others have made it clear that North Korea will not be allowed to have this capability. So if the head of the CIA is telling me they'll have it within 5 months, and if the generals are saying they can't have it, then the war will begin within 5 months. So that's not anything anybody wants to see, but it's an existential threat to the United States. And so with that in mind, it's very clear that gold's going to rally. It's a safe haven. They'll actually probably shut the Korea Stock Exchange, perhaps shut the Tokyo Stock Exchange. Emerging markets will suffer badly. All the capital in the world will pull out of whatever markets it is in, go back to the United States. So they'll bid up treasury notes, they'll bid up gold. The stocks could even go up. I mean, war is sometimes good for the stock market in that sense. The euro will get stronger, the dollar will get stronger rather, because of this flight to quality. So I would expect gold to go a lot higher in 2018, unfortunately for very sad reasons, specifically the war.
Jim, many thanks for your time. It's a pleasure to have caught up again.
Great to be with you, Jordan. Thank you.